Candlestick charts are a popular tool for visualizing financial data, including the price movements of cryptocurrencies like DOGEUSD. They are a type of price chart that displays the open, high, low, and closing prices of an asset in a candlestick format. Each candlestick represents a specific time period, such as a minute, an hour, a day, or a week, and shows the price range for that period. The top of the candlestick represents the highest price during that time period, while the bottom represents the lowest price. The body of the candlestick represents the opening and closing prices, with the color indicating whether the price increased or decreased during that time period. A green or white candlestick indicates that the price increased during that time period, with the opening price at the bottom and the closing price at the top. A red or black candlestick indicates that the price decreased, with the opening price at the top and the closing price at the bottom. Candlestick charts are useful for identifying trends, patterns, and support and resistance levels, which can help traders make informed decisions about buying or selling DOGEUSD. It's important to have a solid understanding of candlestick charts and how to interpret them in order to effectively analyze and trade DOGEUSD. To read and interpret DOGEUSD trading candlestick charts, follow these steps. Determine the time frame. The first step is to determine the time frame of the candlesticks. Each candlestick represents a specific time period, such as a minute, an hour, a day, or a week. Understand the basic anatomy. Each candlestick has a body, a wick, and sometimes a shadow. The body of the candlestick represents the opening and closing prices, while the wick or shadow represents the high and low prices during that time period. Analyze the color. A green or white candlestick indicates that the price increased during that time period, while a red or black candlestick indicates that the price decreased. Identify trends. Traders use candlestick charts to identify trends and price movements. An uptrend is characterized by a series of higher highs and higher lows, while a downtrend is characterized by a series of lower highs and lower lows. Look for patterns. Candlestick charts display various patterns that can help traders identify potential buy or sell signals. Common patterns include doji, hammer, shooting star, and spinning top. Identify support and resistance levels. Traders can also use candlestick charts to identify support and resistance levels, which are price levels at which buying or selling pressure is likely to increase. Use technical indicators. Traders often use technical indicators, such as moving averages or the Relative Strength Index, RSI, in conjunction with candlestick charts to confirm or refine their trading decisions. There are a variety of DOGEUSD trading candlestick patterns that traders use to identify potential trends and price movements. Here are some of the most common ones. Doji. A doji occurs when the opening and closing prices are very close, resulting in a small or non-existent candlestick body. This pattern suggests indecision in the market, and may signal a potential trend reversal. Hammer. A hammer is a bullish reversal pattern that occurs after a downtrend. It is characterized by a long lower shadow and a small or non-existent upper shadow, with the candlestick body located at or near the high of the period. Shooting star. A shooting star is a bearish reversal pattern that occurs after an uptrend. It is characterized by a long upper shadow and a small or non-existent lower shadow, with the candlestick body located at or near the low of the period. Bullish engulfing pattern. A bullish engulfing pattern occurs when a small red or black candlestick is followed by a larger green or white candlestick. This pattern suggests a potential trend reversal, with the bulls taking control of the market. Bearish engulfing pattern. A bearish engulfing pattern occurs when a small green or white candlestick is followed by a larger red or black candlestick. This pattern suggests a potential trend reversal, with the bears taking control of the market. Morning star. A morning star is a bullish reversal pattern that occurs after a downtrend. It is characterized by a small candlestick, followed by a larger candlestick with a gap up, and a final candlestick that confirms the uptrend. Evening star. An evening star is a bearish reversal pattern that occurs after an uptrend. It is characterized by a small candlestick, followed by a larger candlestick with a gap up, and a final candlestick that confirms the downtrend. These are just a few examples of the different types of DOGEUSD trading candlestick patterns that traders use to identify potential trends and price movements. It's important to study and learn these patterns in order to make informed trading decisions. DOGEUSD trading candlestick charts are a valuable tool for technical analysis, which is a method of analyzing market data in order to make trading decisions. Here are some ways that traders can use DOGEUSD trading candlestick charts for technical analysis. Identifying trends. Candlestick charts can help traders identify trends and price movements, such as uptrends, downtrends, and sideways markets. Traders can use trend lines to connect the highs and lows of the candlestick chart, which can help them identify support and resistance levels. Analyzing patterns. Candlestick charts display various patterns that can help traders identify potential buy or sell signals. Common patterns include doji, hammer, shooting star, and spinning top. Traders can use these patterns to identify potential trend reversals or confirm existing trends. DOGEUSD is a cryptocurrency trading pair that consists of Dogecoin, DOGE, and US dollar, USD. Candlestick charts are a popular tool used in technical analysis to visualize the price movements of an asset over a certain period of time. In candlestick charts, bullish trends are characterized by a series of green candles, while bearish trends are characterized by a series of red candles. The length of the candle body represents the price range between the opening and closing prices during the time period represented by the candle. A long green candle indicates that the price has increased significantly during the period, while a long red candle indicates a significant price drop. Bullish trends typically show a pattern of higher highs and higher lows, with the price consistently trending upwards. In contrast, bearish trends show a pattern of lower highs and lower lows, with the price consistently trending downwards. Traders and investors use candlestick charts to identify potential buying and selling opportunities based on the trend and the patterns in the chart. For example, a trader may look for a series of bullish candles with long bodies and small wicks to confirm a strong uptrend and consider buying the asset. On the other hand, a series of bearish candles with long bodies and small wicks may indicate a strong downtrend, which may prompt traders to consider selling the asset or shorting it. Candlestick charts can be a valuable tool for traders and investors who are looking to make informed trading decisions for the DOGEUSD trading pair. Here are some key steps to using candlestick charts to make informed trading decisions. Understand the basics of candlestick charts. Before you can make informed trading decisions using candlestick charts, it's important to understand how they work. Learn about the different candlestick patterns, including bullish and bearish trends, dojis, hammers, and more. Analyze the trend. Look at the overall trend of the DOGEUSD pair to determine whether it is bullish or bearish. Look for a pattern of higher highs and higher lows to identify a bullish trend.